Welcome back. Today, the focus is on the power sector on the economy. Media reports say Adani Power may be seeking to acquire the Butibori power plant in Nagpur. While CNBC TV18 hasn't independently verified the news, it reflects the theme that we are discussing today. It reflects a reality that power demand-supply mismatch is still so high that large companies are looking for acquisitions. Some data on power demand. According to CRISIL, the power demand is growing at an average of 8% per annum, at least over the last 3 years. So which part of the power sector is still good to bet on? To discuss this, I have with me Nikhil Nigania, the Director, Senior Analyst at Bernstein, and Manish Gupta, the Senior Director and Deputy Chief Ratings Officer at CRISIL. Manish and Nikhil, thank you very much for your time. I want to discuss the health of the power sector, or the extraordinary health of the power sector. But before that, Nikhil, just a word on something which seems to be like a bit of a negative, the Bangladesh crisis and the problems it may pose for units exposed to it. You've written a report. Can you tell us which are the companies exposed and whether it's a big deal?
Sure, Latha. So essentially on the Bangladesh side, two entities are exposed. The biggest exposure is Adani Power. So they have a plant in Goda, Jharkhand, which supplies power to Bangladesh. It is at a very good tariff. And I think in terms of FY24, the plant contributed almost 900 crore to the company's profits. So the challenge, I think, for the company could be receivables if things don't improve. So that is one entity. And the second one is NTPC. They have a joint venture and they commissioned the 1300 megawatt plant there within Bangladesh. So these two entities are the ones which are primarily exposed. Are we concerned? Not at this point. Both these entities are supplying power at prices which are lower than many plants in Bangladesh. So they are fine as per the merit order of Bangladesh. But we are watching the event as it unfolds. Yeah. So not concerned right now on these.
Okay, none of the power financiers would be still a spot of bother, would it, Nikhil?
Apology, I missed that. Actually, yeah, you're right. So Adani Power's plant, I think the biggest lenders are PSC and REC to that asset. And I think, but the government's directive, which came last week, that if that plant has challenges in exporting power to Bangladesh, they would be allowed to sell it within India. Will give.
Okay. Okay, so that will give them other avenues. And in any case, as you say, if they are the lowest cost power suppliers, perhaps that will not be the biggest problem. That should not be a problem. Manish, now let me come to the overall power sector dynamics itself. We have seen a lot of power plants getting acquired. We saw KSK, Sarda, quite a bit, indicating that, there is still a dearth, and that's why people are willing to buy what just wouldn't sell between 2016 and 2018. I remember Rajneesh Kumar trying his level best with some 16 power plants which had become bad loans. How is the demand-supply dynamics now?
Yeah, thanks, Latha, for having me on your show. You're right. First of all, from the point of view of power demand, like over the last 3 years, we have certainly seen power demand growth at around 8% or so. And this demand growth is certainly linked with the GDP growth, where the GDP also has been growing pretty well. As we are seeing some bit of a moderation in the coming years, our expectation is power demand growth will continue to be at around 6% or so over the next 3 to 4 years. Now, having said this, I think when we look at the way the power capacities have come up over the last few years, I'm sure you are aware that, there is a strong shift towards the renewable power capacities over the last 3-4 years, and very limited additions have happened on the thermal power capacity side. So while renewable capacities have been coming over the last 3-4 years, but they have not been able to keep pace with the way the power demand has been growing. And hence, from a base load perspective, the demand for thermal power capacities have risen over the last few years. And that is one of the reasons why the interest is there on these thermal power plants, particularly the ones which are under resolution. A good proportion of these stressed thermal power plants have already been resolved. As per a report in 2018, around 41 gigawatt of thermal power capacities was under resolution, of which 25 is already resolved. So what 10 gigawatt is something which is under liquidation or about to be liquidated. But remaining 6 gigawatt is still there for resolution. And some of the things that we are hearing of are linked to those 6 gigawatt of stressed thermal capacities, which are still to be resolved as we move forward.
Okay. Okay. Just a word on Bangladesh. You have any views, Manish? Or it's not something that has developed into a debt issue at all.
Latha, I completely agree with Nikhil, what he said related to the Bangladesh issue. While certainly there can be risks related to receivables or offtake, but as of now, we are not seeing any change for the power plants which are exposed to Bangladesh, and some of the enabling provisions which the government of India has also brought in. I think that should be a welcome shift as well, in case any of those things start to culminate.
Okay, fine. Now to come to you, Nikhil. The ground is laid out that we are growing at an 8% CAGR when it comes to power demand, and within that, of course, renewable is taking the lion's share, perhaps growing at double digits, with thermal growing at lower single digits. But which part is priced to perfection? What would you like? Would you like the generators at all?
Yeah, so if you look at the power value chain, the equipment suppliers, the lenders, the generators, and the transmission companies, there are parts we like in each of them. So the part our top pick right now is still NTPC. We think they benefit both from thermal generation. They are looking to enter into nuclear as well, and even renewables. We think they have an advantage given their low cost of debt. Then we like the lenders as well. PFC, REC, both benefiting from all the capex happening in the sector. And on the grid side, we like Power Grid as well, given transmission is becoming a big constraint for the power landscape in India. The equipment names, while big beneficiaries, at least we don't cover them, but we find the valuations quite rich.
Okay, but would the power equipment, one of the arguments a broker presented to me is that power equipment guys are paid by the power generators, who are healthy companies, private sector, a Tata Power or a CESC or an Adani Power, whereas the power generators are dependent on discoms. So discoms, as we know, are politically always vulnerable to late payments by their own state governments. So by that logic, will equipment guys be better off, or are they already priced out?
No, you're right in terms of they will be, they are not exposed to risks of discom dues. They will make higher margins. They'll see good order inflows, which they're seeing. But just in terms of valuation, outside in, it seems to be reflecting most of it to us. Hence, our preference has been to focus more on the NTPCs, power grids, and the lenders.
Okay. You're not that impressed by Tata Power? Or the private power producers, Nikhil?
We don't cover Tata Power, but what we feel is, the valuations, again, outside in, they're trading almost 30, 40 times price to earning multiple, most of these private power sector companies. Whereas the PSU ones are the ones trading cheaper with good ROEs and with certain benefits, especially cost of debt.
Oh, yes, and good ROEs. After all, they get a fixed ROE for a part of their capex, even now. The old regime hasn't gone away. Manish, according to you, in terms of debt, are power generators much better off now? Because you have the late payment surcharge, some reforms underway.
Yeah, that's right. And in fact, from a rating agency perspective, what we have seen for the operating power plants, the credit profiles have improved over the last 3-4 years. We have seen upgrades happening in the thermal power sector, which was not expected a few years back or so. And one of the key reasons for that is the fact that the late payment surcharge schemes and the other schemes which government has brought in the past, like Atmanirbhar one as well, that has helped put more cash in the hands of the discoms. Discoms have actually in turn paid off their past dues to the generators, and hence the receivable profile for generators have improved substantially. And what's more important is the fact that these generators, having received the cash from the discoms, they have actually reduced their debt levels. So from a leverage profile perspective, the thermal power generators are in a much better stead today, as we had seen in the past. past. So having said that, a key caveat still remains that because the DISCOM's fundamental situation still remains to be weak, and hence how the DISCOM payment behavior will be post the expiry of the LPS scheme, which may happen over the next 6 to 12 months, that remains to be seen and will be a key monitorable from our perspective too.
Oh, that's important. The scheme runs out, is it? Okay, then there is a sword hanging. Actually, this always happens. We start with the legacy power plants and don't have time for renewables. But Nikhil, what would be your pick of the pack in renewables? And there are early signs even of nuclear, which the government seems to be encouraging. Any potential ahead of the curve picks over there?
So maybe on the second question first, on nuclear, the two beneficiaries that we see, one is L&T. From a construction perspective, L&T is a beneficiary. And from a developer perspective, NTPC comes in, given the joint venture with Nuclear Power Corporation. So in the listed space, these are the two names we'd highlight. On the first question on renewables, a conventional renewable generation, not many names, pure play names to play out there. I mean, we are looking out for events like listing of NTPC's renewable business and some more IPOs in this space. On the equipment side, wind, I think, is an exciting theme. But again, as we said earlier, valuation looks quite rich on many of those equipment names.
Okay. You want to add a word, Manish, on the renewable space? At the moment, no worries about debt anywhere.
No, not with respect to debt for sure, but renewables is also going through a transition phase. Currently, renewable power in the overall power mix for India, renewable power is somewhere around 11 to 12% only. At this percentage proportion, renewable power doesn't hit the grid balance so much. So as you're aware, like renewable power is a little bit intermittent, and hence the grid balance becomes the challenge. As the renewable capacities or renewable proportion of renewable in the power mix increases and reaches somewhere close to 18 to 20%, there the risk of grid imbalance will become quite imminent. And this calls in for increased round-the-clock power to be made available, which can be made sure through hybrids, through batteries, and all. Some of these things are very important. Government is trying to make the shift here, and that remains a monitorable, like how that shift happens. And I think that will be an important thing to watch out for in the renewable space.
Sure, but that's way, way ahead of the curve, isn't it? We haven't yet come to grid batteries and companies making them. So that discussion maybe next year. But thank you very much for joining us, Nikhil. We'll invite you again on renewables separately because especially nuclear, a very, very interesting theme. Thank you, Manish, for giving us the perspective as well. We have to wind down on Bazaar, but with the news that markets absolutely on a cliffhanger at this point in time. All the morning gains have been wiped out, but we are seeing a little bit of red even on the Nasdaq futures. So perhaps today is a day of caution. Let's wait and see how the second half pans out. Wrap up on Bazaar. Chart Busters coming up.